OFX was popping. So this week I have been doing an experiment. Okay. I made a video a few weeks ago or a month ago or whatever about negative risk rewards and if that works better or not. So this week I decided to put it to the test and try to see if it really does. Okay. So this week I have taken multiple trades. I've won six of them, or no, I think seven or eight of them in a row. Haven't lost a single trade, right? Last night, took a trade on AUD NZD, and I haven't changed anything about the strategy. Still daily, weekly for the overall direction, 4 hour, sometimes the daily for the levels. And then I buy. My stop loss is below the previous levels, right? So it's at a spot to where it could bounce from here, anywhere inside of here, or even here to recover to go back up. Okay. And then a 1 to point 0.2 is what I've been running. And then bang, TP was hit. And then now look at this. Went all the way down. Now we be in the spot where we potentially be losing if we were trying to go higher risk reward and we were having this and then targeting up here or target right here, whatever, we would have lost. Okay. AUD USD, I did not take this trade. I should have, but I did call it out. I thought price was going to go down, and I should have taken it, but I didn't. But I did mark it up. So, and it played out beautifully. Wanted to show that one. CAD CHF took that one last night. Woke up to it, or it did hit last night also. So on the daily, what I was looking at is prices overall going down, and then we had a little push, a little lower high, big strong push, and then go to the 4 hour. You can see multiple lower highs, multiple breaks of structure, break right here, lower high, break right here, lower high. So I said, okay, I'm going to take sells right here. I'm going to have my entry right here, could reject from here or here, anywhere in here, and then recover and go down. So that's what I was thinking about. When I put my stop loss there, targeted that, boom, TP was hit, right? This one, price is going up. Okay, you see prices going up. It is coming down, but it maintained, made a higher low or made a lower low, but then it pushed up, break of structure, higher low, big strong push. Went up right here. Okay, I put my entry right here on the level. Now again, this is another thing. If you have a smaller stop loss, have your stop loss right below, you're targeting higher, you would have got stopped out, right? Euro CHF took this one this morning. Again, think price is going to go down. Push down, lower high, break. I took the entry. I usually would have taken it right here, and it still probably would have worked out. But I saw it when it was right up here, and it was not fully closed, but it was looking exactly like that bearish candlestick. So I took it, TP. This was not the stop loss. Stop loss was up here. So just in case it would react from here or here, we could still recover and come back down. Euro USD, should have taken this one, didn't, again. But again, same concept, price going down, break retest. Very, very simple. This one is super interesting to me. Okay. Price, I thought was going to bounce from this entire level, right? This entire level I thought I was going to bounce from. So I said, okay, I'm going to take sells. Now we got to go to the 1 to see that I actually really hit it. You can't really tell on the 4. Price goes up there, and then bang, we hit stop loss. And then it completely flipped and just went straight up. What I've been realizing by doing this is that 95% of the time, price is going to get a bounce from these levels. These support resistance levels that I'm playing off of on the daily, the 4 hour, right? Also using the direction, the daily, the weekly for the direction. These levels are very likely to get some type of bounce. And at the same time, I would say price is probably around 30% likely to just zoom through the level. But it is 90+% accurate or plus likely to have some type of bounce. But if we can just capitalize on that little bit of a bounce and not have to worry about if we're completely right about the direction and where it's going to go, that might make a huge difference. That one was good. GCAD, bullish, broke out of this channel, came down, rejected it. And then I saw the rejection off of this level, bought, and stop loss below the low. GCHF, price is going up. You see it, price is going up. And then big support level, wanted to buy at the support. hit it. USD CAD did not get hit, almost, but still, good example. So what I've seen doing this so far is that a lot of times, okay, like I said, what can happen is that 95% of the time price will probably bounce, right? 95% of the time price will bounce from the level, okay? 30% of the time price will go straight past level, right? So when you factor in those two things, and you understand that 30% of the time price is not even going to bounce, regardless of the candle confirmation or not. Price will not bounce from those levels. 95% of the time, price will get, let's redo that, will have a small bounce from level, okay? You'll get some type of bounce from the level, enough to hit a small risk reward, get a little bit of a win. 30% of the time, price will just completely zoom past the level, even if it gets that small bounce. Now, what I've been realizing lately is when I'm doing these higher risk rewards, I'm putting my stop loss in a place. Stop loss, easy to hit. TP, hard to hit. Okay? This is opposite. Stop loss, hard to hit. TP, easy to hit. Okay? Now, when I think about what's the most likely thing to make me profitable in the long term, what's going to give me the highest probability to have success, it would probably be to do the opposite of this, right? Why would I put my stop loss in a place that's easy to get hit, and my TP it's hard to get hit? Wouldn't it make sense to make my TP easy to hit and my stop loss hard to hit? Wouldn't that kind of make sense to do that? So if we're going to look at this, right, and we're going to look at this as a break and retest, what's the most likely to get hit? Probably this, because the TP is really short and stop loss is really far away, compared to these where the stop loss is very easy to hit and the TP is really far. Like I said, 95% of the time price will probably give you a little bit of a bounce, which is all you need, and then it might just completely tank. You don't know. Sometimes it will go all the way up and just completely fly, and you will be able to catch crazy risk rewards. But going back through a lot of the trades that I've taken recently that I've lost, I see that majority of them did give me some type of bounce. Only I think one just completely tanked and didn't even respect the level at all. But majority of them give some type of bounce. So what if every day we could go on here and we could just catch a little tiny piece of the market and just move on and wait for the next day? Because what I've been realizing is that all of these add up to be around the same amount of money. I mean, if you are, anywhere 25 to 30% accurate with that versus, you are 55 to 65% accurate with this, and you are 95% accurate with that, it's all going to add up to be around the same amount of profit at the end of the day. It's invertedly correlated in the sense that the lower you go in the risk reward, the more you're going to win, but you win less when you do win. The higher you go, the more you're going to lose, but you win more when you win, right? So it just adds up to be around the same amount of profit. So why would I not take the one that is going to give me the best psychology benefit, right? And the most likeliness to be profitable in the long run, right? The psychology benefit of this is going to be that you just win a lot of your trades. It's probably going to help you. You're going to go into every single trade, just like I have this week, almost expecting to win. I almost am expecting to win every single trade. I've won 7 trades in a row now. I haven't lost one. So it's like, yeah, if I lose one, I'm going to wipe out a lot of the profit. But what's better, to take these and have the psychological benefit of going into trades knowing that I only have to be 30% accurate, but it's probably pretty hard to get past that level of accuracy with this, or to know that, if I lose one, I have to win 5 to break even, but the likeliness of me losing one is very rare because I'm going to win so many trades because of the setup, because the stop loss is so big, it's hard to hit. The TP is really easy to get hit because it's so small. I don't know. That's what I've been thinking. I haven't called out any trades this week because I don't really want to call out any of these unless I'm really going to 100% switch over to that. But I don't know. I think this is really dope. I really like taking trades like this. It's really really fast TPs, and I love the psychological benefit of just going in and being like, oh yeah, I'm probably gonna win this trade, and I'm probably gonna lose or win 90, 95, maybe even higher percent of the time. So far, it's 100% of the time, but I just started. So to me, it kind of just makes sense. Let's take a let's take one that's gonna. I mean, they're all gonna get me to the same destination in the end. Just take the one that makes it a little bit mentally easier because trading is a complete mental game, just like everything else is. But let's take the one that's gonna make it mentally the easiest to do, which is this one. So I don't know, man. It's just thoughts coming out of my head. It just kind of makes sense to me. I have 7 trades that I've won so far this week. Really, really easy. You know, a few of them would have completely stopped out higher risk rewards. I don't know. My personal opinion from all the back testing that I've done, you know, in the past few days and also a few months that I've been really focused on risk reward, making all these risk reward videos, it really just seems to add up to be the same thing. It really doesn't make that big of a difference. What really seems to be the thing is, what do you prefer? Do you prefer to win a lot more but win less when you win, or lose a lot more but win more when you win? It's like, what psychological benefit do you want to have of knowing you only have to be 30% accurate, or knowing that you're never really going to lose? You know, that's really what it comes down to. So just thoughts in my head. So far it's working out really, really well. Slowly compounding the account with really small wins on a daily basis. That's it, man. OFX out.